Hello, you're watching Deal Flow, the show that tracks merger and acquisition activity in Africa and beyond. It's the world of investment banking, corporate takeovers and private equity deals all on your screen. I'm Erica van der Merwe. We shift to property in this week's show. The South African property sector has been hugely exciting over the past few years in terms of deals done, listings and expansions. We talked to Arrowhead Properties Chief Financial Officer Imraan Suleman about his firm's experiences and his views on the outlook for the property sector. But first, a look at some of the latest deals making headlines. Chinese PC maker Lenovo has been making headlines in the M&A arena lately. Internet search company Google bought a nearly 6% stake in the Lenovo group for $750 million. And Lenovo has agreed to buy Google's Motorola handset division last week for $2.9 billion. Still on the technology front, LinkedIn has agreed to buy Bright, a company that uses data insights and matching technology to connect employers and job seekers. Subject to adjustment, the transaction is valued at around $120 million. South African lender African Bank plans to sell off its retail unit, Ellerines. African Bank plans to retain the financial services part of the business, as well as the distribution footprint to sell loans. The Vodafone Group won the Indian Cabinet's approval for its $1.6 billion deal to buy out minority partners in its unit in the country. And back on the African continent, the South African unit of Japan's NTT Corp has bought French IT company Nextira One for an undisclosed amount as part of a plan to double its annual revenue by 2018. JSE-listed property loan stock company Arrowhead Properties is on an acquisitive drive. Late last year, it announced deals valued at about 650 million rand, partly funded through a successful capital raising exercise. Imraan Suleman is the Executive Chief Financial Officer of Arrowhead Properties. Welcome. Really good to have you here. Imraan, looking at the news, just the recent news, you've been very active. It's a very ambitious business. And if you look only at the property book, it's now valued at about 4 billion rand and growing.
I think if we look at September 2011, when we originally started out, with properties worth 1.4 billion rand. We did say to the market that we had a long-term view or a 5-year view of reaching 10 billion rands in asset value, and we've come some way towards that. At the end of September, we had assets worth about 3.1 billion rand, and at the end of February, or the beginning of February, we've actually gone up to 4.1 billion rand. So I mean, part of Arrowhead is focused on growing its distribution. That's achieved by rental escalations in the existing portfolio, and a large part of that comes from acquisitive growth.
So what's the flavour? So your website says it's a retail, industrial, commercial property in secondary locations. So what's your philosophy?
Our philosophy is to focus on yield. In evaluating potential acquisitions, we firstly look at the yield that the acquisition will offer us, and thereafter we'll look at various qualitative and quantitative factors. We'll look at the quality of the building, the location, the tenant, the length of the lease, and etc. But the first step has to be yield enhancing. So if we are funding properties at 10%, we need to buy properties in excess of that, probably in the region of 10.5% to 11%.
Right. It seems as though you're managing that, because if you look at your full year results to September last year, your distributions grew by nearly 12.4%. It's market beating numbers, these. So you're getting the recipe right. So you spoke about managing costs versus what you're managing to pay out. So what are the risks for you in being able to sustain this?
We've shown growth of 12.36% to September last year. We forecast growth of 11 to 14% for the current financial year. So on the basis that we don't do any additional acquisitions, and we had the property portfolio that we had at September 2013, we'd deliver 11% growth. Based on the additional acquisitions that would come through during the year, we would potentially grow that to 14% and maybe beyond.
Nice.
We've done R1 billion, so the 11%, I think it's safe to say that we're going to go past that. In terms of funding properties, there's two ways of funding it. You go to the markets, you do a capital raise, or you look at vanilla bank funding. Now, what's happened in the last little bit, from May last year, funding costs have moved up significantly. Bank funding has moved out. the knock-on effect of that is yields in the property sector have moved out as well. So whereas you could, I think it's safe to say that the entire property sector is now funding properties at 200 basis points, 150 to 200 basis points higher than it could fund a year ago. So that needs to be built into the yield. Into the yields at which you're able to acquire going forward.
What's the proportion of debt, for instance, in your assets?
We're very, very much lower than the average across the sector. As at the end of September, we had around about 24% LTV, 24% gearing to property values. Right now, 2 weeks ago, we undertook a capital raising exercise. We've also brought on additional properties. A large part of that was paid for with equity. The result is now that our funding ratio, our LTVs, have actually moved to below 20%. It's not going to stay there. Our ultimate goal is to get it up to between 35 and 40%. That's where we would be comfortable. But what it's given us by doing this capital raising exercise is that we've got huge debt capacity to fall back on. Right. We've got a substantial portfolio pipeline that we're looking to implement within the next 6 months. And a large part of that will be, or the vast majority of that, will be, if not all of it, will be funded via debt. We've got capacity in place. We've currently got gearing of around about 750 million rand. We've got additional facilities of 300 million rand that we can draw on existing facilities. And based on the acquisitions that we've implemented, there's an additional 600 million that's available to us.
And interesting that debt raise, or the capital raising rather, was oversubscribed. So clearly there seems to be appetite, and perhaps also reflective of appetite in general for listed property in South Africa. Still a dearth or an underrepresentation of listed property on the JSE compared with other markets. Yes,
I think it was the first, our capital raise was the first property company to come to the market to raise capital this year. We were a bit uncertain because of the way bond yields had moved out. We weren't, people were pricing in additional interest rate risk, increasing interest rates. So we were also advised in advance of undertaking the capital raising exercise that we were probably looking at placing at a discount of around about 5% to spot value. But what we had done at that point, we looked at the properties that were coming across. We looked at the average yields that we were buying at. We were buying at properties at yields of between 11 and 15%, an average of around about close to 13%. We looked at what we thought we would be able to get the funding away at, and that differential or that margin was sufficient at that point in time for us to proceed with that capital raise. Interestingly enough, the capital raise was heavily oversubscribed, and we managed to actually get it away at a discount of around about 3%, which in these challenging markets I think is actually a very good going.
Certainly interesting. Now going back just to the fact that you being acquisitive, are there concerns amongst your unit holders about the pace at which you are growing?
Look, I think if you bought into the Arrowhead story from the time of listing, we made no bones about the fact that we were going to be acquisitive. We're amongst the leaders in distribution growth in the sector, and a large part of that has to be funded by acquisitions. We touched on it a little earlier. I think distribution growth is actually threefold. The first step is the existing portfolio, rental escalations. We've got the situation in South Africa where our leases escalate by anywhere between 6 and 10% on average. So that's your first level of growth. Then by fixing gearing for a period of 3 to 5 years, you've got the fixed gearing levels and the increase in rentals above that. So that gives you a second layer of growth. And I think combined, those two layers gives us probably in the region of 8 to 9%. So to take us to the 11 and 14%, we have to bring in acquisitions at yields in excess of which we're able to fund to bring in that additional margin.
And you are finding those assets, or are they plentiful?
Well, look at our history over the last couple of years. I think in the first year we did 600 million rand worth of acquisitions. The second year we did 750. This year, for the first 4 months, we've done R1 billion already. So I think there are opportunities out there.
Just sort of more on the nitty-gritty, you spoke about the yield escalations built into your contracts. So what are you feeling or seeing in terms of cost escalations? So, for the last few years, we've seen that in terms of electricity pricing, property rates and taxes and so on.
Okay, on electricity, a large part of that is, virtually all of it is passed on to the tenant. So I mean, there have been high escalations in electricity over the last couple of years. It doesn't really impact us as much as it does the tenants. What it does do is push the overall cost of occupancy up, puts pressure on the escalation rates that you're able to get in terms of rentals. But I think the other thing to bear in mind within our portfolio is that we had a shorter lease profile, a lease expiry profile than our peers. We've got an average 3.5 year lease expiry profiles. Now, what that has done is because we've got a shorter lease expiry profile, it's ensured that the rentals that we are charging are closer to market values. We haven't had instances where we've had leases running for 10 and 12 years. We've got the odd ones, but on average, we haven't had leases running for 10 years, escalating at 10 years, with the end result at the end of 10-year period, you find that the tenant is significantly above market. Most instances, we are at or below market. So I think from that perspective, we're fairly comfortable. From a cost perspective, rates, we've seen increases of between 6 and 8%, 6 and 9%, depending on which municipality you're looking at. So we are able to pass on some of that. Some of it is for our account. So that's factored into all of our forecast and budgeting processes going forward. And other expenses we're largely able to keep a check on. So I think on average our cost base has grown by around about 7% for the year.
Well, good for you. Imraan, so if I were to just looking at the bigger picture, if you looked at corporate action in the listed property sector over the last, what's it been, 5, 6, 7 years?
Yeah.
It's been very interesting, phenomenally so. Do you expect this pace of excitement to continue with more listings and acquisitions and consolidation?
I think it's actually going to get much more exciting right now. We've seen over the last couple of weeks there's lots of consolidation in terms of corporate activity going on. I'm not sure in terms of new listings. I mean, at the middle of last year or prior to May last year, there was talk of anywhere between 12 and 18 new property companies coming to market. A lot of that hasn't happened. I think because of the way yields have blown out, investors are looking for premiums from new entrants. So I think you have to come with a very convincing story in these markets. And I think amongst the smaller caps, to fund acquisitions, it's becoming rather more difficult. Amongst the smaller guys, the guys with the smaller caps, it's going to be more difficult to raise capital because of liquidity concerns, of premium concerns that the investors are demanding. I mean, we've had a successful capital raise, but I think if you look at us as opposed to our peers amongst the smaller caps, we've got a much larger shareholder base, a unit holder base, so we're much more liquid than our peers. So I think that counts hugely in our favor. But I think what's going to happen with this drying up of capital is that and we've seen it starting to happen, there's a move to companies beginning to consolidate. We've seen Synergy Vukile has taken a stake in Synergy. We've taken a stake in Arrowhead, and now we see that both Rebosis and Delta are looking at taking stakes in, or they have taken stakes in Ascension.
Yes.
That's going to play out very interestingly.
So plenty more to come. Thank you so much. Imraan Suleman is Executive Chief Financial Officer of Arrowhead Properties, and thanks for joining us. And that's it for this week. Do join us again, same time next week. Goodbye.